Professor Ciamac Moallemi, thank you so much for doing this.
Thank you, Fahad. It's wonderful to be here.
We're here to talk about 21st century finance, and one of the things that we have to begin with is around blockchain. So really to level set our conversation, Professor, can you tell us what is blockchain?
I think that's a great place to start. I think there are a lot of misconceptions around blockchain. Very often, ideas related to blockchain are intermixed with cryptocurrencies, and the narrative you read in the press is the price going up, is the price going down, so on and so forth. I think that's not the interesting part. I think the interesting part about blockchain is its use as a technology. In other words, what does it actually do, and what is it capable of? And to that end, it is a new technology, and I think in particular, it's a new type of computational abstraction. It's a new computer, if you will. And I think there are sort of three ingredients to blockchain. The first ingredient is that it is a computer, right? So a modern programmable blockchain like Ethereum is a general-purpose computer. It has data. It has code that can operate on that data in various ways. So that's the first aspect. But then, we start to add functionality, namely, it applies ideas from economics. And one of the key ideas from economics is sort of the notion of private property. So blockchains are like computers where there's also a notion of you have different agents participating. Those agents can own certain things, and there's permissions in terms of who is allowed to do what and so on. So that's the second aspect. And maybe the third aspect is, unlike a typical computer, for example, your laptop that you may use at home or whatever, the blockchain, we don't sort of run individually. It's sort of collectively run by a group of, people called miners or validators. So if you will, it's kind of a computer in the sky that's not really sort of operated by any individual person, but is operated through consensus mechanisms. And what this means is different people, because no one person is sort of controlling this computer, we can collectively agree to run our code on this computer, and that takes the form of what's called a smart contract. A smart contract is literally a piece of computer code that runs on a programmable blockchain. And because it is being run by many different validators, all of whom are checking each other's work in this quote-unquote computer in the sky, we can be assured that it's trusted and that it's going to execute as we intended, and that nobody is going to cheat. So in this way, we can think of a blockchain as kind of like a new computational abstraction that is going to allow different groups of people to interact in different ways.
One of the biggest tech companies I recently read marketed as a moment to revolutionize the financial world. Why does it have this level of potential?
So I think even thinking beyond the financial world to think sort of what's the ultimate end game, what's the promise of blockchain, I think you have to sort of take a step back and look at the way that we interact with each other in society today. More and more, these interactions are modulated through information technology, right? If you go outside, you don't call a cab anymore. You call an Uber, right? If you want to go on vacation, you leverage Airbnb. And so, the dominant kind of paradigm here is we have these platforms that are coordinating different types of people, let's say drivers and riders. And, this is becoming sort of the dominant paradigm. And while these platforms generally work very well, I mean, I'm certainly happy with Uber's service, there's a problem in there in that once you have these large tech platforms, very oftentimes they can exert monopoly power. And this is because the types of businesses in these platform economies have very strong network effects, and so hence natural monopolies form. Like, for example, in the ride-sharing space, the more drivers a company has, the more riders will go there, which in turn will attract more drivers and so on. And what you eventually expect, what economics predicts, is that eventually there will be sort of one dominant player. And the way you see this play out is if you look at platforms like, let's say Uber, right? Uber does not provide the car. Uber does not drive the car. It does not pay for the gas. It does none of that, but they take 30%. Right? And so the fact that platforms like Uber and Airbnb and Amazon and, the Apple App Store and so on, the fact that they're able to, really extract these very, very high prices, in Uber's case for simply running a website, right? That suggests that they have monopoly power. Blockchain offers an alternative, right? So we're not there yet, but the sort of the future promise of blockchain is really to, instead of coordinating people through a centralized tech monopoly, coordinate them through smart contracts, coordinate coordinate them in a way where, let's say, drivers can bid, how much they want to be paid. Riders can bid how much they want to offer. People can be matched. Prices can be set by market forces, right? And not through a sort of a centralized actor. And so this is the idea of decentralization. And blockchain really provides a technology that can allow that.
So what are some of the successful applications you've seen so far?
The biggest successes in blockchain are in the financial world. If you look at what people are doing right now, like let's say on the Ethereum blockchain, which is probably the most popular and active smart contract-based blockchain, it is basically what's called decentralized finance. And the idea here is to replicate traditional financial functions, for example, lending and trading, but do it in a decentralized way. Now, let me explain what I mean by that. If you think of the way we typically do something like trade a stock, right? Well, there's exchanges. There's places like NASDAQ or the New York Stock Exchange or so on. Or in the cryptocurrency world, we can think of places like Coinbase, right? So these are, again, centralized entities where buyers and sellers go and, they, do price discovery and they trade and so on. What blockchain allows you to do this in a way where there's no trusted central counterparty, right? In a way where people can sort of directly trade with each other, potentially with less intermediation, and also without the need to trust people. And I think a great example of sort of needing to trust people going wrong is the recent collapse of the FTX exchange, right? This was a centralized exchange that traded crypto products, and in order to trade on that exchange, you had to sort of put your money there, and it turned out to be sort of a giant fraud. I think ideas like decentralized finance allow a way around that, where again we can perform those kind of common functions. People can lend money, they can borrow money, they can exchange assets, but without trusted intermediaries.
So is the elimination of bad actors one of the things that this decentralized finance does better than traditional finance?
Yeah, I mean, I think it's very explicit about trust relationships, and doesn't require the same level of trust that we require in traditional finance. But I think there's also other ways that decentralized finance offers some advantages. Maybe the biggest one is this idea of composability, right? So the idea of composability is that if you have different financial functions, like let's say borrowing and lending versus trading, they're all kind of different computer programs. They have APIs, if you will, like programming interfaces, and you can combine them in different sorts of ways, compose them. The word people like to use is money Legos. It's kind of like you have this different types of functionality, and you can combine them in unique ways. To contrast that with the traditional finance world, it's typically difficult to do things like that. Like let's take the example, let's say you want to buy some stock, and then sort of with that stock, you like the stock, you want to hold it, but at the same time you want to borrow money against it. You can do that in the traditional financial system. It's called margin lending, right? Your broker will allow you to sort of buy the stock, and then will lend you money against it. In sort of the decentralized finance world, all those pieces can be picked apart, right? You can decide to trade in one protocol, borrow in another protocol, and combine them in ways that maybe the protocol designers hadn't even anticipated. So it really offers all the kind of openness and ability to define new things that you get through general idea of sort of computer programming.
So a lot of benefits to it. What about some of the cons for it?
Yeah, I mean, it's a nascent technology. There's a lot of issues. I'll highlight a couple of them, and I think it relates back to some of the points we discussed earlier. While it, again, we get all the benefits and the flexibility of computers and computer software, there's also downsides, namely, for example, bugs. It's very difficult to write a computer program that doesn't have a bug, right? So for a traditional computer program, let's say you're, implementing the Uber app on an iPhone. If it has a bug, maybe the app crashes, or something like that. Maybe your customers can't access the service for a while, but it's usually probably not catastrophic or existential. In the blockchain world, where the computer programs are smart contracts, if there is a bug, it is quite likely that, or it's possible that someone can leverage these bugs to sort of steal money. A small bug can all of a sudden lead to maybe an exchange being drained of all its assets. So this idea of hacking and bugs in smart contracts, this is one huge issue that needs to be addressed. I think a second issue that needs to be addressed is, because of the fact that there's sort of limited trust relationships, in general, there's a little bit less credit. And what that means is that things on the blockchain are typically more capital intensive, right? So, for example, to trade on an exchange, you typically don't have to put up all the money up front, right? You can put up some money, and your broker lends you other money. And while you're trading during the day, there's credit relationships between, let's say, the exchange and the executing brokers and clearing brokers and so on. All these people know each other and they trust each other. And what that lets you do is let you create this environment where large amounts of money are being exchanged, but it doesn't tie up a ton of capital, right? In the crypto world, nobody trusts anybody for sort of good reason. You don't know who the person on the other side of the trade is. So because of this, and because of sort of a lack of credit, you end up posting capital in many different places, and businesses become, there's less capital inefficiency. Finally, I think, a big issue in blockchain is it sort of inherits the issues in the cryptocurrency world. Namely, there's, it's an unregulated space, and I think the positive side of that is, you can try new ideas and you can innovate. The downside of that is we don't have the consumer, and the broad protections that we're used to. So you see all the scams, of the frauds and so forth that we see in the cryptocurrency space. Also, maybe at the intersection is the worst part. And I'm thinking of examples like FTX, where on the one hand, it's sort of kind of crypto-ish, so it's sort of offshore and unregulated, and there are none of these consumer protections. On the other hand, it's also centralized, right? You have to trust them. So you're trusting people that are unregulated, and we, in hindsight, it's not surprising that there were a lot of scams there. So I think, again, the underlying technology, I'm quite sort of optimistic about, but it is true that there are a lot of issues in the surrounding ecosystem.
It's the use of the word trust that can sometimes trip me up. For example, it's a good thing that it is a trustless platform. Why? Why is that such a good thing? Because then if you look at the situations like FTX was a system that requires trust.
Right. And so I think we should be very careful. FTX does not fall within the blockchain world. It did not operate on a blockchain. It was a centralized exchange, just like NASDAQ or Coinbase. However, it operated overseas in a largely unregulated way, right? So if we contrast that, maybe the most popular decentralized exchange is something called Uniswap. Uniswap allows you to trade sort of the same way, but you don't have to trust Uniswap, the company. You don't even have to know who they are. How it operates is public. The source code is there on you can look it up on GitHub. See sort of exactly how it works. The way it works, you don't have to trust who the other participants are. You don't have to trust that Uniswap is going to walk off with your money, because again, it's all through the blockchain. It's not like you're sending someone else your money and they're holding on to it, and you have to sort of trust them. So I think trust can be good, and again, the idea of if people know each other, extending credit, that's sort of very powerful. But on the other hand, trust also imposes constraints on things. So for example, we have to be sort of in a common legal system, and we have to sort of hire lawyers and so on and so forth. Being in a trustless environment lets you interact with a much broader range of people, potentially all over the globe in a way where you don't need to rely on those things.
So where are we in the regulatory world? What does that look like right now from a decentralized finance perspective?
So I think right now the regulatory environment is very challenging. My sense is, in decentralized finance and in crypto more broadly, there are certainly a lot of bad actors. I think, some types of regulation are certainly warranted, but I think we're in a situation where, maybe earlier in the cycle there sort of wasn't enough regulation, and now where we're, in a little bit of a bear market, and you've had these major scandals like FTX, maybe the regulators are cracking down, but it's not necessarily fully being done in a constructive way. And what I mean by that is, again, I don't want to, sort of advocate that there should be a no regulation. I think regulation serves a very sort of powerful purpose. But the way it's being implemented right now is really regulation by enforcement, really regulation by going after bad actors, which is fine. Let's go after the bad actors. But also, I think regulators have a role in maybe illustrating how things should be done. Right, and so one example I like to think about are stable coins, right? So what is a stable coin? A stable coin is a digital asset that is linked to real world currency, most popular of which being the U.S. dollar, right? So the idea of, let's say, a collateralized stable coin is let's say take a bunch of dollars, invest them in safe things like maybe put them in a bank or put them in treasury bonds or something like that, and issue digital tokens that represent claims on these dollars, and so hence would be linked to sort of the value of a dollar. If you look at that and you squint your eyes, it pretty much looks like a money market fund, right? A money market fund, again, the fund administrator is out there buying bonds and, commercial paper and so on and so forth, but you get this claim in your brokerage account that says you have, sort of certain percentage of that. We know how to regulate money market funds. These are, not new products. But, in the stable coin world, we are starting to see sort of regulators, kind of go after this and go after various kinds of stablecoin operators and so forth. There's certain things that are highly speculative and highly risky. But if you're talking about stable coins, it seems like a product that's let's say very similar to money market funds. Very easy to sort of think about what the regulations are for that. Why don't we have a regulatory regime that permits these kinds of things? That's where I think the regulation is falling short.
What do you think is needed to actually realize that potential? I mentioned earlier that it's marketed as a revolutionary moment. What do you think is needed to fulfill that promise of that statement?
I think we haven't found the right product market fit for blockchain. We found one product market fit, which is finance, right? And again, as I mentioned, if you look at what people are actually doing with blockchain today, most of it is decentralized finance, right? However, in my mind, finance can't exist by itself, right? Finance has to serve other ends. For example, lending someone money so they can buy a house, or providing an entrepreneur capital so they can start a business and so on. And so I think what is missing in the blockchain world right now are applications that sort of maybe non-financial applications, which is interesting for me to say, being a finance person, that sort of connect to sort of the real world and provide a utility, wherein then we can sort of layer the finance on top.
Of course. Turning to our curriculum here at Columbia Business School, first question: why is this subject important for business school students?
So I think our students want to be at the forefront of technology, right? I think technology is again becoming a dominant force in business and society, and I think blockchain is a novel technology. And I think to the extent that students are interested in topics like entrepreneurship or venture investing, some of those businesses that will launch will be blockchain. Some of those the funders will be in this space, and so I think it's important to sort of engage with the technology and understand it, in order to be able to sort of pursue the business opportunities.
And how is it being taught in courses right now?
So we have a number of different courses here. We have a class called Blockchain, Cryptocurrencies, and Digital Tokens Demystified. This is taught by Professor Robert Farnokia. This is sort of a short, intensive, block week class. It's taught entirely over the course of a week. It's meant to be sort of a quick but not superficial introduction to the topic. Beyond that, we have a semester-long introduction to blockchain taught by Professor Gur Huberman and Omid Malekian, which is sort of a broader and also simultaneously deeper introduction to sort of blockchain. And building on that, Professor Huberman also has a class called Blockchain Market Infrastructure and Uses, which is really sort of, it starts to get into the applications, talks about, smart contract programming and so forth. So those are sort of mainly the technology classes. In addition, on the regulatory side, we have a class taught by an adjunct professor, Donna Riddell, and where she sort of focuses on regulatory and legal matters related to blockchain. So we're trying to offer a broad curriculum that, again, might be relevant for the next generation of entrepreneurs or venture capitalists who are entering the space.
Of course, of course. Are you seeing CBS students finding opportunities in this field?
We are, but that said, it's a challenging time.
Yeah.
So we're in the middle of a bear market in terms of crypto. The environment is economically challenging. So it is not a traditional career route. If you come here, for example, and you want to do investment banking, it's very obvious what to do, right? You go to your coffee chats, you go to your interviews, you get a summer internship, so on and so forth. I think for something like blockchain, I think it's a little bit more challenging. Those tracks aren't necessarily there. But that said, I think the students who do pursue that direction, they have to do a little bit more of the legwork on their own in terms of meeting people and engaging with alumni who are in the industry and so on. But my philosophy is always you get out of it what you put into it, right? So if you sort of really leverage the Columbia Business School environment, really leverage what's going on here in terms of the research, our alumni networks, and so on. I think there's a lot to get out of it. And to that end, as part of the Digital Future Initiative, I run something called the Brigger Family Digital Finance Lab, and our mission is to explore, applications of, digital technology and digital transformation in finance broadly. But, one sort of large direction there is blockchain. So we have a, digital finance seminar series where we bring in, sort of top academics, researchers, as well as top researchers from industry. We've been, sort of organizing conferences and panels and so forth. So I think that's another sort of a great resource. And finally, I think that the last point is just sort of where we are. I mean, New York City is a major center in terms of blockchain technology, but especially in decentralized finance. And I think some of that comes from the fact that, of course, New York City is also the center of traditional finance in the United States. So there's an entire ecosystem downtown of startups, larger players, venture investors, so on and so forth.
Do you think that there are enough examples of early adopters where organizations who are interested in adopting the technology can do so now, that there are enough examples on how to use it, how to perhaps use it in its most beneficial way to fit your purposes?
I think it's very much a research area, both for academics such as myself and for, again, entrepreneurs sort of trying ideas, right? I think the technology is there. We have ways to sort of have groups of people interact through complex mechanisms with very clear rules and, so on and so forth. But again, I think the main challenge is we really haven't identified, outside of finance and outside of trading, we haven't identified the applications that might most directly benefit from this.
Is there a particular sector that excites you?
I think disintermediating these large tech platforms.
Yeah.
That's sort of the thing where I think there's the greatest potential going forward.
Yeah. Well, thank you very much, Professor. This was very, very interesting, and I'm glad that you mentioned the Brigger Initiative. I was going to ask you what other initiatives you are a part of. Is there any other resources that you would send interested listeners to?
Sure. So come to our website. I believe you can just Google Brigger Family Digital Finance Lab. Watch our videos in terms of the seminar series and conferences and so forth.
Wonderful. Well, thank you again for your time.
My pleasure.